SAE 3400 Examination of Prospective Financial Information. A. Meaning of prospective financial information. It is a financial information based on assumptions about events that may occur in future and possible action by the entity. It is highly subjective in nature and requires considerable judgment. Note: prospective financial information can be in the form of forecast or a projection or a combination of both. B. Meaning of forecast. When prospective financial information is prepared on the basis of best estimate assumptions, that is, assumptions which management expects to take place and actions management expects to take when such future events actually take place. Meaning of projection. When prospective financial information is prepared on the basis of hypothetical assumptions, that is, future events and management actions which are not necessarily expected to take place, or a mixture of best estimate and hypothetical assumption is used. D point. Responsibility of management for preparation and presentation of prospective financial information includes the following: identifying and disclosing prospective financial information, explaining the basis of forecast and underlying assumptions. E. Precautions to be taken by auditor before accepting an engagement of SA 3400. First, understand the intended use of information. Next, nature of assumptions used, that is, best estimate or hypothetical assumption. Next, period covered. Next, information will be for general or limited distribution. And last, what all elements are covered in the financial information. These are the precautions. Note: if auditor believes that the assumptions are clearly unrealistic or information will be inappropriate for its intended users, then he should not accept such engagement. F point, this is important one: performance of audit procedure to examine prospective financial information. Auditor should consider following factors while determining NTE of procedures to be performed: the knowledge obtained during any previous engagement, likelihood of material misstatement, stability of entity's business, management's competence regarding preparation and presentation of prospective financial information. Next, while performing procedures, auditor should consider the source and reliability of evidences supporting best estimate assumption or hypothetical assumption. Auditor should also consider whether these assumptions are consistent with the purpose of prospective financial information. If they are clearly unrealistic, then he should consider withdrawal from engagement. G point. Auditor should assess the presentation and disclosure of prospective financial information and underlying assumptions. Generally, following points are considered during such assessment: whether presentation is informative and not misleading, whether accounting policies and changes in accounting policies are clearly disclosed in the notes, whether assumptions used are adequately disclosed, along with a clear indication that whether these assumptions are best estimates or hypothetical. The date as of which financial information was prepared should be disclosed. H point. Reporting on prospective financial information. First, elements of auditor's report. This is important. There are few general points and then there are specific elements. So general points are title, addressee, etc., like date, place, signature. And specific elements such as following: reference to SA 3400, reference that management is responsible for prospective financial information, including assumptions of prospective financial including assumptions. Next point, reference to the purpose of restriction on distribution of prospective financial information. Next, statement that the examination procedure were performed on a test basis for evaluating the evidences supporting the assumptions or amount or disclosures. Statement of negative assurance: anything has come to the attention that causes the belief that assumptions do not provide a reasonable basis. Express an opinion that whether prospective financial information is properly prepared on the basis of assumptions and is presented in accordance with applicable FRF. Reference of appropriateness caveats concerning the achievability of results indicated in prospective financial information. For example, we should mention that even though Future events as per hypothetical assumptions may occur, but still the actual outcome may not be the same as expected in financial information. Last, date place signature. Second, if auditor believes that presentation and disclosure of prospective financial information is not adequate or more assumption used do not provide a reasonable basis for preparation of prospective financial information, then he should either express a qualified or adverse opinion or withdraw from engagement if that is more appropriate. Important note: can professional accountants be associated with prospective financial information? Clause 3 of Second Schedule to Chartered Accountants Act 1949, that is Clause 3 of Second Schedule of Professional Ethics, states that the CA in practice shall be deemed to be guilty of professional misconduct if he permits his name or name of his firm to be used in connection with estimate of earnings contingent upon future transaction in a manner which may lead to the belief that he vouches for accuracy of forecast. Above clause do not preclude CA from associating his name with PFI. CA can participate in preparation of forecast and can review them provided he indicates clearly in his report the source of information, basis of forecast, major assumption made in arriving at forecast, and he does not vouch for accuracy of forecast. Same also applies to projections.